Welcome, everybody. Thank you for coming to our panel. Thank you for Maya for that lovely shout out. I don't know why I'm the one and only. We have also ones and only here, but I'm absolutely thrilled to be moderating this panel with you today. So my name is Gabrielle Inzurlo. I am a financial regulator here at ADGM. Welcome. This is the third day. I'm trying to hype myself up. Am I also trying to hype up Jez and Mohammed? Mohammed, you were telling me you were about to fall asleep, 5 minutes ago. Are you awake?
I'm ready.
You're ready? Are
Yeah.
you sure?
Yes.
Okay, great. So, my guests, first of all, to my left, I have Jez Mahidin from Laser Digital, who very recently, I say recently, but about 6 months ago, got their license here in ADGM with the FSRA. And, of course, Mohammed Hamdi from Further Ventures, that also got their license a while back. Now, it is an absolute pleasure to be with two FSRA-regulated firms because it does mean that I can ask all sorts of difficult questions and they absolutely have to answer, right? Apologies. It's okay, you don't have to suck up too much. I will ask my guests to first introduce themselves and then we'll delve into a little bit about what they see in Abu Dhabi and what they see in the digital asset ecosystem here and how they're building it up. Jez, do you want to go first? Tell us a little bit about yourself.
Yeah, sure. For us, the decision was quite straightforward. Obviously, come to Abu Dhabi. Why we think it's significant for a number of reasons. Obviously, starting with a very flexible and robust regulatory framework. We are almost a hybrid entity. Both we do digital assets as well as traditional assets. So for a hybrid entity, it's always very tricky just to get into it and get on with our obviously objectives, while a regulator, which is probably fairly well understands the hybrid nature of this asset class, as well as an entity which can operate in that, was quite relevant for us when we decided on Abu Dhabi.
Can you explain a little bit to the audience what you mean by, so what exactly is your core business model at Laser Digital?
Absolutely, I think. So Laser itself is a crypto-native firm born out of a very large traditional firm out of Japan called Nomura. They are the large shareholder, fully owned subsidiary of that. The entity itself specializes in digital assets and actually traditional assets if needed, so which is what I meant by. So what are we there? We're there to solve, in effect, the bridge the gap between the traditional financial firms and digital asset entity. So for us, we are actually providing service to a lot of crypto-native entities as I would say, a regulated entity, while also we are holding hands traditional entities coming into digital asset ecosystem, know-how and basically providing them, different types of advice and liquidity and so forth. So Laser itself actually has a number of verticals, starting with actually we provide deep liquidity to institutions and qualified investors, market making services, asset management services, treasury management particularly for foundations and so forth, both traditional as well as digital asset entities, and then of course asset management services, finally also venture to institutional investors and qualified investors. So that's the speciality of Laser. For us, why Abu Dhabi from there on was fairly straightforward because not too many regulators give us clarity around obviously what we can do and where we can operate. Beyond that also a number of other advantages, location, obviously proximity to institutional capital, access to also talent, which is actually not straightforward, particularly when you get into this industry. And also, obviously, whether we like it or not, Abu Dhabi is a thriving tech hub when it comes to AI, blockchain, and so forth. So that's actually, for us, a natural place to be. Yeah.
Nice, that's good to hear. Mohammed, please, tell us a little bit about Further Ventures. You have a very special business model. You're also very active. We had the Further Ventures Summit recently on Monday. There's also the Embedded Finance Summit that's happening now. So you are very much embedded yourself here in Abu Dhabi. But tell us a bit more.
Yeah, so Further Ventures, we got regulated by the FSRA in September 2022. And just a little bit about our thesis, because it's very much involved around what we do today. We wanted to focus on building digital asset infrastructure. So we wanted to make sure that we built a layer of infrastructure where we would be able to service institutions, financial institutions, enterprise. And in 2022, there was a huge gap in regulatory clarity globally. So when we wanted to build an edge as an investment firm, we felt that there was a regulatory arbitrage opportunity to take advantage of what ADGM had in terms of clarity and rule books. And we felt like this was the opportunity for us to really carve an edge being an investor in that space. Today, we have some of the first regulated infrastructure plays in the country. We've managed to take advantage of that with stakeholders globally, and we've done that with digital assets, but also with fintech startups. The benefit we've had with our stakeholders is that, our startups as a counterparty business, people get very, very comfortable dealing with our portfolio companies simply because of the regulated status that they have within ADGM. A little bit about our operating model. In 2022, again, we felt that there was an opportunity to venture build. And what that meant to us is two things. It meant that we would build conviction internally as a team, as opposed to getting founder-led ideas where we would fund them passively. And it also meant that we would have an opportunity to really do concentrated bets from an investment perspective into the builds that we wanted to back, which meant that we weren't going to bootstrap, but instead really lean in and investing in these businesses where we would take care of the regulatory capital, where we'd make sure we would fund the balance sheet in order for us to be able to carve a position with stakeholders and counterparties with us. So it was a bit of an interesting approach towards portfolio allocation as a venture investor.
That's interesting about the venture building part, particularly because it's very resource intensive. So before being a regulator, I was also doing venture capital, but investing, small ticket sizes. And let me tell you, I was doing a bit of spray and pray. I'm not going to lie.
Yeah.
When you do small tickets, what are you going to do? But you're putting in an enormous amount of time, resources in order to build ideas and actually get them, like a baby almost, get them out. So when you actually come up with these ideas, it's because you see gaps in the ecosystem, and not just the ecosystem in Abu Dhabi, right? Can you tell us a little bit about that process of seeing?
So part of conviction is the process of us talking with our regulators. Within ADGM, what was interesting for us compared to other regulators is that we were able to talk to people that had native knowledge on what we were doing, which typically is difficult in the space of digital assets. So we were fortunate enough to do that. Same thing with fintech. So our ideation process starts with talking to the regulators, sharing with them what we want to do, and figuring out the hybrid approach, because typically with an innovative approach, regulators need to catch up and understand what we're looking to do. That was extremely helpful and beneficial for us, especially when our licensing process can take up to 14 or 16 months. And that is not necessarily exclusive to ADGM. Most regulators globally will take that much time to actually issue a trade license for you to be able to operate whatever that business is. So that was something that we really appreciated. The second thing is, the spray and pray model works from a return profile, but also a different approach would be venture building, where we concentrated capital. And you're right, besides capital, it takes a lot of partner time because, myself and Faisal were co-managing partners in the fund.
I've seen you lobby on behalf of your firms.
Yes, yeah. So we actually end up being operators as well, which is, it's a lot of work and time. And, I've learned that from Jez as well. Jez, I've seen you, you yourself coming in sometimes and pitching on behalf of the startups, given your background. So that's the reality, is that the sponsors, the investors, they themselves have to become operators, and toggling between a fund manager and an operator is two very different personas. Yeah.
Jez, do you want to add on that?
No, absolutely. I mean, obviously, Hamad touched upon very important points. I mean, very similar sort of experience I've gone through with him. We've worked with them. I've actually pitched to him some ideas. We co-incubated projects. So it's a thriving ecosystem here. For sure, the regulatory clarity has paved the way. For us, when we first came in, it was quite clear, more we spoke to the regulator here, they understood the pain points in the ecosystem, and they provided more, I would say, solution as opposed to kind of giving more problems. And clarity meant that we could actually build something sustainable long term. So for sure, obviously access to people like, further venture and also backed by, proactive government as well helps a lot. Right?
I see. Jess, stay with me for this next question. Now, you are backed by the most institutional of institutional, of traditional, I guess, players. Like there is nonetheless a reputation. How does that, I guess, very institutional focus feed into the business models that you're working on?
Yeah, so
If at all, you can.
Yeah, very true. I mean, when we incubated Laser itself about 2.5 years ago, a lot of institutions tried to incubate and set up a digital asset practice. Very difficult because they're always worried about contamination risk to their main entity. So one of the theses when we incubated, we said let's segregate it, put a defined amount of capital, and then allow. It's almost like a sandbox, but it's a commercial entity. It's not a a cost center. And areas where we can dominate. But one thing our board very early on understood was a crypto ecosystem is actually 5% institution, 95% retail. So you need to provide solution to that ecosystem, hold their hands. I mean, because if you're going with the thesis that it is fully institutional, we're waiting for institutions to come through, it will take time. So people need to be patient. Very similar to obviously a lot of the venture investing as the incubation going on. Actually, that's paving the way for institutions to come through. Over the last 2 years, we have seen it. I mean, this year we've seen so many institutions here. And also large crypto entities are becoming institutions. So when I talk to even our board, at times it's like they forget to at times understand, here institutions are born almost a weekly basis.
It's true.
Multi-billion-dollar entities.
It's true, and it's done over conversations.
And of course, it takes time for the regulators to get comfortable, their practices and all that, but they are coming.
It's true. Yeah, they are.
So I think we are trying to address to that market and make sure they do things properly, and there's governance and all that. So there's a lot of learning going through, but obviously we're still early stage.
So I didn't send you guys this question, but I'm going to ask it anyway. So anyone who wants to take it. Like you mentioned, crypto, digital assets, and such is very much 95% retail, right?
Yeah.
And that institutional adoption is coming slowly but surely, and obviously it brings a lot of depth to the market, right? But when you are building out firms, is it possible to go from a retail focus over institutional, or do you have to be institutional from the get-go, institutional focused? Is it possible, or anyone who wants to answer can?
I'm happy to quick up because I face with this issue every day.
Okay.
Obviously, when we set out our thesis, we are only servicing institutions as well as qualified investors. So we don't touch retail ourselves. However, a lot of retail platforms require institutional liquidity.
Right.
So we are the backbone for a lot of these retail platforms. So for sure, we don't touch retail. Our model is not retail. That's the mandate I've got from the board. However, for the asset class to kind of graduate from where they are, the kind of nascent asset class to a proper institutional asset class, you require institutions backing them up. So for us, a lot of us, we feed liquidity to retail platforms, although we don't touch retail ourselves. The first instance. Gradually, of course, large institutional pension funds to when obviously BlackRock's come through. Yeah. It's a very clear data point, right? In 10 months, BlackRock's ETF is larger than, 20-year-old gold ETF. How quickly when it comes to the point of inflection, it just goes into. So now it's actually a boardroom conversation in most of the institutions. How do we actually expose to digital assets, what portion of it is, our investment process and all that. So yeah, for sure, our audience is ultimately retail, but the reality, we don't touch retail. We are kind of, I would say, intermediary.
Right.
But gradually, that's actually graduating, I would say, to large institutions. Please.
Yeah. One of the things the question depends on who you ask. So if you're going to talk to the product person, the architecture, the technology architecture will differentiate if you're going to build something for retail versus enterprise. If you talk to the underwriting team, the team that actually analyzes and makes a decision based on commercial viability, the economics of retail versus enterprise is very, very different. From a regulatory perspective, it's a lot easier to regulate a business if it's enterprise versus retail. It's just the burden particularly with KYC. Just as
That
one
is true. I can
Yes.
vouch for that.
Yes, yes. So that's, sometimes we can be a little bit more selfish in saying, you know what, we don't want to deal with that. But the reflection of the valuations on retail is very much reflected because it's difficult. It's a difficult hurdle to jump. But to Jez's point, a lot of our thinking internally is how do we tap into existing distribution. So we as investors want to build something innovative and then tap into the existing distribution channels of telcos, banks, institutions that do have the burden of managing retail. And that makes our life a lot easier. And we can give examples about that. Yeah. So.
Sure.
Examples? Give us some examples. I'll
Go
take
after
it.
you, Jess.
You see, it taps onto the same issue, right? So if you, large liquidity providers, let's say
Yes,
larger banks, today they are starting to, even US banks, some of them are starting to provide liquidity of digital asset. Retail customer can go to the platform, wealth management platform, click and trade.
It's still minimal, though.
Still minimal, but they're actually, it's happening at a significant pace. So some of the oldest firms like Fidelities of the world, you can do it. So when they do it, typical liquidity at the backbone is we provide. So they do the KYC onboarding their existing client base. It's much easier to, Mohammed's point, once you have already a KYC pool of clientele, we become the backbone for liquidity. So the back end of the engine tends to be a platform like ours.
I see.
Yeah.
We, one of the use cases, we like to think of use cases today is how Fuse, it's a portfolio company that we have, is powering the trading platform for WEO Bank.
Really, yeah.
So today when you open up your WEO bank account and you have a current account, you're able to transfer into your trading account and you're able to trade crypto and you're able to settle back into your current account seamlessly. So that plumbing is actually powered by a business that we built, which is called Fuse. One other example, and this is something that we did recently. I don't know if Clarice was here. I saw her in the back. But we're backing Clarice because she's innovating a lot in the wallet management space. So a lot of these institutions need digital wallet infrastructure. It's a very different type of architecture than the current wallet infrastructure for financial technology. And no matter what the use case is, whether it's trading or whether it's remittance or holding any digital asset, whether it's a loyalty or an NFT, whatever it may be, you need wallet infrastructure. And DFNS is doing that with highly regarded institutions. So we also look very much at how to improve the interfacing and the experience institutions have to adopt these use cases. Yeah, so.
Very nice. I guess that my next question is going to be trying to kind of relocalize it a little bit. So obviously we are here in Abu Dhabi, and you guys have set up here in Abu Dhabi for a reason. How do you see this market as an adaptable market also for your firms, right? Because obviously you guys are, in a way, you're fund managers, you're authorized as such, you're venture builders, you are big in your own name, right? But you are working with slightly smaller startups that are building up. And would you say that this is a good place for them to grow, or do they also have to kind of, tap into more global streams?
I can start initially. For sure, for us, it's a great region. I mean, almost a very beneficial region to start because it gives a lot of clarity on many fronts, which is I touched upon. One of the biggest issues we faced as well when we started up the entity, when we started in some of the European jurisdictions, access to talent as well. Which is, here we are around, whether it's a blessings, we are around almost access to 3 billion people around, if you look around, right? And they are fairly tech savvy as well, which is highly beneficial. And also a number of other things, government's help and tax benefits, number of other things favors access to talent. For me, it's very critical talent when you have a startup. The lack of talent and all, you have kind of way too, I would say, the hybrid working is harder when you start up an entity. And then the fact that you have pure, clarity from regulator, particularly transparency. I mean, clarity around regulatory, framework is extremely important because as a startup, you don't want to take too many risks on that, right? whether you decide to do completely unregulated or you decide at a certain stage you want to graduate into a regulated framework. So whether you start with sandbox and all that. And then the other issue is, I think, the vision, I would say, is a kind of, you have a global vision with kind of local relevance. What I would say, it's very easy access to different regions, global markets from here. Where one good thing about, obviously, I think real strength of ADGM as well FSRA is actually it's a global par excellence regulator, right? You can compare with Singapore, Hong Kong, or UK. It's there, and regulatory kind of, I would say, not passporting, but most of the regulators globally, including Japan, they recognize as a very credible regulator.
Well, we also do say that if you manage to get a license here, you can probably do the applications at other places as well.
That's right. So for me, yeah, so a number of, obviously, jointly incubated efforts as well. We felt that it was a good jurisdiction to incubate and start up some of these ideas and get going. So, yeah.
Anything to comment on your side? On your firms? Because, you definitely
He's
do.
doing it anyway.
Yeah, he's going to do it anyway. But I do know that you definitely come to us with your firms every now and again, and you're like, you need to regulate this. Please help us.
So it's been, so Launchpad here, capital here, and then export is something that we constantly look at. So yes, the addressable market here, especially on retail, but I think on the institutional side, one might argue that it might be meaningful, very, very meaningful here. On the retail side, maybe it's important to actually be able to export. And you see that with businesses that are direct-to-consumer businesses as well, right? So, yeah.
Okay.
The same points, I 100% agree with Jez. Huge weight to talent. It is the most important thing, and it's also something that we're fortunate because it's not a difficult sell to get people to come move here with their family. And I don't want to, spend too much time, but when we recruit for talent, people come with their families. They are able to live in Abu Dhabi. They're able to go find good schools. They're comfortable. These are things that are not related to business or investing, but matter a lot, right?
Yeah. Ultimately, you have to take...
The life cycle of moving here is very easy, simple. People are comfortable, and that's the most important thing.
For sure. It was a great selling point for us a year ago. Now it's actually gone because many of them are saying they're moving as well.
Really?
Yeah.
Well, I think that goes into my final question as we wrap this up. Is ultimately we've seen institutional adoptions and an incredible amount of institutions actually moved to Abu Dhabi in the last few years. I've been coming in and out of the region since 2017, and it was coming, but I felt more like capital was coming, and then going back, and then coming, and a little bit like what I was doing, I guess, back in the day. And now we're seeing a real commitment of, setting up and putting institutional processes, institutional wealth, institutional, capital, and all of that all together here. What do you think is missing that could, just help accelerate that even more? It's not an easy question. We think about it all the time, right? Because we want to make this an attractive jurisdiction.
I wouldn't say missing. I don't think anything's missing, but there's always, it's the opportunity to keep the pace that we've had here from a regulatory advantage moving on forward. So we've definitely had that advantage over the last 3-4 years in our space in digital assets and fintech. I think your role and your job is how do you continuously push.
You want us to stay on our toes.
Yes. Yeah. That I would say that because people now are looking up to us here and catching up. So what's the next move?
Well, and I don't want to hog our last minute, but a lot of people on panels across have been asking the question with the whole U.S. changes happening. What does that mean for us? And we're just like, we welcome it. It's the pie will only get bigger, and we will stay on our toes, and we will keep doing what needs to be done. No.
I think very clear point. Absolutely. That's because the gap will tighten, which is good. Because ultimately, U.S. has largest amount of capital, institutional capital. You need that, particularly the areas we are talking about, building infrastructure, building venture. You need the U.S. to come through, which is why we've seen in BlackRock's biddle itself, how quickly it's transformed the entire space. So I think it's not a bad thing, others coming, catching up. But I agree to your point, keeping up with the pace now will be the, a good
Okay.
challenge.
Well, in that case, thank you, gentlemen. Thank you for your insights.
Pressure's on you.
Pressure's
Yeah,
on
pressure's on you.
pressure's on us. But I think we're holding it up fairly well. Jez, Mohammed, thank you so much.
Thank you
very
I
much.
hope you
Thank you
guys
so
enjoyed
much.
this session.
Thank you.